Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am No FOMO Charts. It's a new year. It's 2026. This is a special video today. It's live. It's Sunday, January 4, 2026. It's about 7:30 p.m. Eastern Standard Time. Welcome everyone. This is a swing trading and a investing YouTube Charts video and channel. So let's get started. I'll talk about this video format at the end of this document. Upcoming stock earnings releases. We have Constellation Brands, Albertsons, Applied Digital, and Cal-Maine. Economic data, we have manufacturing PMI, non-farm employment change, services, PMI, job openings, unemployment claims, average hourly earnings, non-farm employment change, unemployment rate, consumer sentiment, and inflation expectation. A lot of data. Important. Recent stock news. Stock market earnings season will begin in about 2 weeks, mid-January, for financial and bank companies. Warren Buffett officially retired as CEO of Berkshire Hathaway. Greg Abel was selected to start as CEO in 2026. There is other news, but we'll just focus on the charts right now. So, SPY and QQQ, they recently rejected down from their trendline resistance, and they're now testing their EMA support zones. We'll look at that. Bitcoin and Ethereum, both cryptos bounced up from their recent consolidation support levels, going sideways, and then we had a nice rally right after New Year's holiday, which is great. Now I'm starting to see potential bullish momentum. We could have a pullback, but at least we had that nice bounce off of the lows. Now the schedule for this video will basically be part one will still be the original videos that I usually do, the indexes and crypto charts like Bitcoin and Ethereum. However, I'm going to try again like I used to years ago, where I would go more in depth and do more stocks and more crypto charts, let's say top 5 or top 10, and I might show additional data like EPS and revenue or net income for stocks, especially because usually technical charts and analysts are not showing that or not talking about that because we're talking about price so much and indicators. I believe actually for investing, the correct way is we need to look at the financial data, especially before earnings. Then I might do a little more crypto charts, looking at those charts for any potential setups or anything I see. And at the very end, if there's time, in these videos, I might do 1 or 2 bar replay trading examples just for education. Because if I only talk about charts, it's not really clear what am I actually doing, or what am I actually sometimes trying to say or convey without additional examples. So this could be a win-win for most people, that if I show and explain in more detail, people who want to know that get that information, and then people who just want the short charts will just do them 4 in a row starting now. SPY, S&P 500 ETF. Recent price rejected down below 691, pulled back down to 682 range. Futures, which we'll take a peek at, actually had a small bounce up, but that's just futures chart. Going back to SPY chart, we're still in a potential longer term uptrend, except we're starting to go sideways in this consolidation, which is really not good to see. I don't really want to see that, because once we lose that strong uptrending momentum, then it makes the market weak for potential pullback. These specific candles might not be the greatest to draw a parallel channel. I'll just do something like that, where we're starting to lose momentum. And I'm starting to see potential double top below 691. what could invalidate this idea is the good earnings that's coming out in the next 2, 3, 4 weeks. If we have great earnings, we can definitely break out of here. Or not definitely, but we could break out. And if earnings are bad of anything, let's say spending was bad in certain companies, profit was bad, we could pull back down to 670. So I'm closely watching the 677 range. It's probably better if I just leave that wedge up there and I can see something like this, more of a triangle. So the next support level down would be 677 and the resistance will be 685 to the top side. Weekly charts, a little bit yellow light for me because we did for 1 week test that upper resistance. We're starting to lose momentum on the weekly, but the daily chart is not a perfect buy setup for me. The 4-hour chart could bounce because we had that lower stochastic intraday. So just consolidating right now, we can see we were up and then we're going down, and you can see it start to go sideways now in the price. Let's go to Nasdaq. First analyzed price, we're still stuck under that resistance of 626. Pulling back to the middle zone of the symmetrical triangle in the yellow. Right around 610 is the middle spot, and that's the 50 EMA. So if we have anything bad happening in the next couple weeks, it could drop down to 600. If earnings are wonderful, I'm looking for that breakout above 625. So those are basically the 3 ranges that I'm playing. And if I was really wanting to play those, I would put 3 alerts. Something like this, just to make sure I'm playing those zones. But for now, starting to just rest on the average. But you can see long term on the chart, we're not in a super uptrend mode of AI growth anymore. We're starting to go sideways. People are questioning valuations and price. On the weekly chart, what I'm concerned about is this M in the white color. This is the price. M double top potential below 624. So if this is actually true and then the price collapses 2% down, that would bring us to approximately the 600 target. That's why I'm saying that could happen. I don't want to underestimate the weekly chart too much. So on the daily chart, again, similar to SPY, I'm seeing more intraday, like 1 hour, 4 hour momentum setups. But if I want to come into a trade, I want to come into some kind of really low value spot so I have room for it to go up instead of trying to buy near a top. So I'm just kind of waiting on QQQ for now. Let's just go to Bitcoin. Like I said, we're going to do abbreviated streams in the beginning analysis. So let's look at Bitcoin on Bitfinex. This is what I was saying about 2 to 4 weeks ago, that if we're holding the price, if I turn off the EMAs, if we're holding the price support down here above 85,000, and we're also holding 87,000, like I said in just last week's video, that there was a chance that we could have momentum bounce breakout. And remember, price trend, very simple. This is a perfect example on Bitcoin. Are we price trending up? Is it up trending? Is the price currently going sideways, consolidation, sideways, or is the price trending down? It depends on how much data you are using in this example. But right now, we're not actually downtrending right now. We went from a downtrend to a sideways consolidation to a very short-term uptrend. So I longed Bitcoin and crypto. I'll just estimate where I did it. And so I'm waiting for this potential W double bottom setup. It might not go that high. But what I'm saying is just the psychology of, if we're not going to actually crash like this and the price is going sideways, then to me, it becomes a greater than 50% chance that we might see at least a little bit of a bounce up. Now, I don't want people to get too excited because the bears can still, and this sometimes happens, where we hit the 50 EMA and we still reject down. So we could still reject down from this. I hope we don't bear market crash from this spot. That would be pretty sad. But if we just pull back a little bit to retest the 20 EMA, which is around 89,000 or 90,000, and then we try to get one more leg up, I think that's a likely scenario unless something bad happens with the news. But what I'm saying also on indicators is when I said there was bullish momentum building, that was true. We had the first momentum. I use squeeze and MACD because sometimes squeeze, I can see that second momentum better than this MACD green histogram. So it's open, MACD, bullish momentum building in November, bullish momentum building in December. And because we're not crashing, this is one of my bull setups where I say, wait a second, it's not crashing. I'm seeing a second bull momentum. The MACD is open. If I want to show this very clearly, if I actually open it and turn my signal and MACD line back on, I know from experience, this is open because we're in the green zone where it's open. So when the price stops dropping, where else are we going to go? Not down, we're going to go up. So then I bought Bitcoin, for example, 5% gain. Now, what I'm seeing on the squeeze is there's a potential for continuation. This is what I would love to see. Because when you get that cyan histogram, maybe it can continue. Sometimes it doesn't and just keeps crashing. Sometimes it goes up. So that's why I'm very carefully watching. Sometimes we get rejected below the 50 EMA and keep crashing down. Sometimes we actually have continued. Where's a better example? Back here, sometimes we have continuation, but that was already an uptrend. So there's a chance here for Bitcoin for additional confirmation. Yes, it's at the top of that linear regression, so I'm expecting a little bit of intraday selling from algorithms. Pull up pivots. I like that we're above this white pivot. I like that because we were stuck under it for a long time. So now we're above the pivot. Perfect. That pivot support, 89,000, we must hold that. And then there's a chance to get to like 92, 95, 99,000 Bitcoin. Definitely possible. Let's go to Ethereum. Similar, where we were in a falling wedge pattern. We were in a downtrend. We went from consolidation sideways to a downtrend, back into a consolidation. Oh, how the price trend is reversing. It's reversing because it's not going down if we look at the white line. Then we had a small bounce. If we have a pullback, that's the double bottom W setup that I like. Support tested multiple times above 2,800, higher low in the price, breakout of the wedge, falling wedge. That's 3 signals for me. Add on a double squeeze momentum, bullish. If I even want more indicators, this might be confusing to people, but that stochastic RSI was low, MACD is open, RSI in the neutral range. We're above a support line. That's 5-6 reasons technically why I entered, and we're up in Ethereum right now. So if price stops crashing, there could be at least a small bounce. I'm not saying we're going to all-time highs in 30 days. I'm just saying we have a small, nice little bull bounce to kick off the year. Beautiful. So the next resistance spot I'm looking for, 3,200, 3,300. Just play very simple, 3,400, 3,500. Simple ranges. I'll play the pivots more. So with Ethereum, I entered in somewhere around 3,000 zone estimated, and I know now my support zone is about 3050, this pivot point. I'm going to use that as one of my support zones. We could pull back. There's a lot of colors here. We could pull back down here into the pink zone, which is about 3050. I don't want to see it fall back down to 28. That would be not good because remember, for both Bitcoin and Ethereum, we're still in the death cross. Watch out for that. I'm just saying from a short squeeze experience that if we have multiple double bottom, I probably want to get in there to play that bounce as a trader. As an investor, I'm still cautious about this death cross because we have to get above all the EMAs to like mid 3,500 Ethereum, uptrend back in the EMAs, cross back up, and then try to go back to 4,000, which is like more like all-time highs. So crypto is a lot faster. It's a lot more sensitive to technicals. Now that these four main charts are done, I'm going to show a little bit of my simple process of going down my top 10 list and doing rapid technical analysis just to see where are we with these other charts. Because a lot of times, if I don't go over it, there's actually action happening on those charts. So now we're going to part 2. If you don't want to watch the rest of the long video, I appreciate it. I understand. Thank you so much for watching this video. If you like this video, consider clicking like, subscribe, hit the notification bell, leave a nice comment or request for a chart. And I still do chart requests. I'll open that back up. Now, let's go back to stocks. So we have earnings season coming up pretty soon. And when I rapid fire look at these, we're seeing resistance, like even on Dow Jones, we're seeing resistance below 488. Zone support at 479. We're still above that pivot point, and that's good, but we're not at a relative low, like a dip spot. It's a very small dip right above the 479 zone, but it's not like a major dip. Now, Russell 2000 is in the short-term downtrend as well, testing that 50 EMA of 246 range. I am seeing this head and shoulders on Russell 2000s that could be bad. We broke below the neckline, so we're actually in a kind of a bad spot on the Russell 2000. If this pulls back, we could crash 4% down, back down to 237.50, double that target, negative 8%, and bad crash would be 228. Probably though, we're going to stop on these EMAs on the way down, 246, 241, and 231 as well. Let's keep going down. Haven't looked at gold for a while on this video publicly. I look at it all the time on my own. But what I'm seeing on gold is, yes, we are in this uptrend of massive flight to precious metals right now. But if I only look at technical analysis charts, I'm already seeing a bearish potential momentum setup happening on GLD. Just from experience, we have a two higher high touch points where the price is rising over time. You might be able to see this better on a weekly chart. But then, for example, on the RSI, we're having 2 lower low touch points. We're losing momentum on the MACD. And we're also just beginning to lose momentum on the squeeze. So I think there's going to be a pullback on gold at some point. It might not be a crash on gold, but we actually got the pullback already. But I'm saying this long-term setup is kind of not ideal. If you just get one of those in the pullback, that's why we had the double bottom in the recovery. But the second time is just from a technical chart standpoint, that's like textbook bearish divergence. So what I'm anticipating is if people stop buying gold and this turns into a small head and shoulders, if we reject on this, downside targets would be 385, 367, or if it's real bad, 340. Then I might enter gold there because I like low value. That's what I like. But if we just happen to just dip a little bit down to like 388 and it keeps going up, then that's totally fine because I understand the uncertainty in the market sentiment right now. Let's go to SLV, silver, and we can see the chart I'm looking at in the top right corner here and the time frame. So I'm on SLV daily chart. This is a good example where we had a pullback and then we had a higher low. Volume started increasing. We're still fanned out on the 4 EMAs. That's total uptrend. So maybe just looking back in hindsight, I probably should have invested more and traded silver more, but I usually trade tech stocks. So this is just something that I'm actually glad I didn't get into this because people started having massive FOMO up here. I started hearing bad news about that. And when it starts getting real choppy, I usually don't enter trades up here. I like to enter trades here. So as an educational aside note, that even if we use no indicators and I'm just looking at price, if I just draw a simple symmetrical triangle on silver, it's very easy to see that setup, right? We just saw the setup on SPY and QQQ. So this is like the greatest bull case scenario if you have a massive breakout in demand or catalyst. But we're in the symmetrical triangle. Discipline technical analysis measure 16%. So we could go 16 to 32%. We hit the first target, 32%, second target. Can we hit the 48%? We hit the third target, right? So technical analysis helps. And then once we break out above the resistance zone, which was about $49 to $50 price or $49, that's when the explosive move happened. If we use indicators, if we look at the bottom here, the stochastic RSI was showing me higher low. Now the squeeze indicator was the big signal because RSI kind of looks neutral. It was MACD and it was RSI. It's MACD and squeeze, which is why I have these on the bottom here. Sometimes when you get a massive squeeze, there's the initial momentum. And then once it flips to cyan, you can get kind of large runs, rallies. So that's what happened on silver. Last time it happened as well. So I'm sure chart analysts were looking at that and saying, oh, we can have like this great rally on silver. But in terms for me right now, if I was forced to make a decision about, okay, where am I going to buy next? Personally, I don't like buying so high. I personally just don't like doing it. That's a personal rule for me, that if it rallied up so high, so much, maybe don't buy it in the overbought weekly zone, right? Maybe I could buy the EMA touch before. Don't buy a shooting star that's flying up in space, because there's a lot of potential problem that could happen long term from that, in my experience. So what I want to do is on a daily chart, I want to at least buy a support, like a line touch or a support somewhere. So I'm looking at maybe $62 for a trade, or $55, $49, or $41. And now the big question is, when will it come back down there? And do I have discipline to wait? Copper. This will be the last metal. Copper, I played options on copper. This is such a whiplash trade where we were having an uptrend and there's flash bad news. But we can see here, even in this example, that even though this is like a catastrophic fail here in terms of technical analysis, not what happened in real life, but TA charts, it recovered and succeeded the price, because it hit this gap down, flushed out everyone on options and trading. And then we had a support level, and then we had a nice breakout. So we can see in metals, it's very like consistent in terms of we're either in an uptrend, sometimes we have flash crash, but then it stabilizes at some point. And once the trend stabilizes, then people start getting confident and say, oh, we can get back in here. And then at some point, if I ever see this happens on gold, silver, and copper, maybe once a year, is when it consolidates and starts squeezing, I can play a potential breakout pattern, meaning resistance breakout or support buy. And then if I did that, I would have had like a 10% trade. It's just an example. Right now, it's a little too high for my taste, for my analysis. So I wanted to come down maybe at least to the 50 EMA or 33 or 32. So you notice that for me, I've trained myself for many years that I don't just jump into trades because it's already coming in. I want it to pull back. Give myself a margin of safety here. All right, let me go over my natural gas. I played natural gas options. That was the last options trade of last year, and I had right in the money success. The target was perfectly hit, although this is a very risky play. So I'll show you what I did, and I'll analyze for next time. So natural gas, first off, does not respond to charts perfectly. So just because I see something happening on a chart of natural gas, wherever setup is happening, it does not mean that it's about to go up or down. Natural gas is not a stock or crypto, because I backtested this for every year. I usually backtest just to make sure. Do indicators work, yes or no, on natural gas? My backtesting shows that the most average indicators do not work on natural gas. So what I did was play trend instead of, so I'm saying these oscillators down here, it doesn't always work. So I'm not ignoring that. What I played was this. This was my exact analysis. I saw us go from downtrend to, again, consolidation sideways price in a large range. This is a very large range. Almost 15-20% from top to bottom. But we didn't go down. So then I said, wait a second. This looks almost like a support zone. So $12, $13, $14. So I kind of came into this trade late and I said, wait, let me try to play this last breakout. So I missed the bottom support. So I came in right around, I think around $14. And I start to see that we're topping out. But because of this particular setup from experience, I thought maybe I could play the last part of this bounce if we have a breakout retest and uptrend. What also informed me was natural gas futures, NG1, or just NG, that I saw a golden up cross happening on that. So I said, wait, this is probably going to go up on natural gas. The golden cross is somewhere around here. So then I played it. I played my option trade, a single leg call option. I bought it at $14, like somewhere around here. And I had a mental stop in there. I think I bought 14 actually over here. I bought it in early November. And so it was whipsawing around for me. I'm glad I held it. And then my target was 15. So very, very short-term target because I understood I'm trying to target like the last part of this. So this is like, I would say this is advanced trading. Options and futures is not for beginners. So please do not copy me. This is not financial advice. I'm just showing what I did in my thought process. And it was volatile. And so maybe the one thing I missed, what I can improve, is when it gapped up shooting star to $17 that day on Friday, probably some kind of options expiration, 1645. I had to sell at the end of that day to capture maximum profit on that trade. But I waited one day and then we had a massive gap down and I still hit my target. So I still hit the target 1530 right on the money. Because my target is 1515 by end of the year. So I decided, all right, this is options. Do not hold it because natural gas, sometimes when you get a gap up, you get violent pull back to the downside. And it was violent in terms of volatile. It was a 25% crash. So if I didn't sell and get out of there, or if this was a stock trade for the same amount of percentage, if I didn't have a trailing stop or stop myself for profit, and take the profit, I would have made nothing on that trade. So I just want to show that sometimes if I don't enter the bottom, my risk management will get tighter. And I love trailing stops. I like OCO orders as well. So let's keep going down here. Let me do some Magnificent 7 stocks, but I'm going to use a different set of indicators. What I'm going to do is I'm going to open up my financial indicators and then just add some EMAs. So what I have here at the bottom is I have this Apple stock. At the bottom, I don't always use this because I use different data resources for this, but I like how TradingView, you can add the financial data as an indicator oscillator on the bottom. I think this is critically important. I believe it's critically important for all investors, including myself and even traders, to at least monitor the top line and bottom line numbers that are coming out of earnings and the news headlines. At least EPS, earnings per share. There is net revenue in this. Is called, I guess it's called net income. So I just look at net income. Some websites is net revenue for the fiscal quarter. The two bottom ones down here, I'm just going to close these, return on equity percentage and free cash flow. We'll just close those. And then I'm just going to put up a basic moving average on top. And so I'm going to open up the indicator set, just type simple like MA cross. And I like using my colors, yellow for 50 EMA, red for 200 EMA, blue for my cross, 50 SMA, and 200 SMA for my long. So now we can see very simply, I could just turn off everything else. Very simply that Apple golden crossed on September 15, 2025. I'll circle it. The price has been uptrending. And this is not the perfect example, but the earnings, the EPS going from this spot to, hold on. Just make sure this matches up. Because on TradingView, you can see in the green vertical lines, we have EPS reported $1.65, and that was here. Although this indicator is not lining up perfectly for some reason. It's like offset for some whatever reason. It might be a bug glitch on my chart here. So this is supposed to probably match like this. This goes here, and that goes there. So the next earnings should go like that, just for reference. So we can see here that when people are anticipating the earnings, even though we had an earnings drop on this particular August 2025, that the price is increasing and went above the 50 EMA, and we're anticipating some kind of move happening here. So sometimes price precedes the earnings. Sometimes earnings precedes the price. So this is an example where the price and the expectation of Apple and AI and sales in their phones and computer sales was bullish because we're starting to uptrend, and then we went into a massive uptrend. So even here at the last part, if we went from $1.57 EPS to $1.85, that's positive. And after here, it was a little bit sketchy pullback, but then finally we got a little bit of a move. So I don't play earnings that specifically, but I think it's important to just rewind the charts and then just look at what was the actual Apple EPS since pandemic. It's cyclical, it's seasonal. That's why it looks like this. Up at the end of the year, and then it kind of goes down. And then maybe for next Christmas, it's up, and then holiday, and then it's down for a year. And then next Christmas goes up. So this Christmas, we had a holiday, we had a very strong EPS quarter as last year, right? So let's go down to Microsoft. So you can see Microsoft, even if we ignore the price, is that their earnings per share since the pandemic in 2020 here has been basically in a nonstop uptrend. Although Microsoft did not have such a strong year-to-date move. Same with their net income. Basically, if you pick even year-to-date from the beginning of 2025, it was about 25.82 billion, and then towards the end of the year, it's up to 27 billion. So it's good. And we can see that once that earnings happens, let's say in April, that's where we get the gap up. So I remember a pro fund manager, I just talked to him recently again. He just reminded me, make sure I'm buying stocks that are uptrending in their EPS and financials or revenue. And then when the price dips there, unless it's an emergency reason, that's actually a buy signal. It's an easy buy. That's what I'm trying to improve for myself next year, because I am such a hardcore technical analyst, chart person, that I can make my own decisions based upon the technicals. But if we're only looking at price or like indicators like price and volume, remember that EPS revenue of uptrending for 1 year straight is not in the forefront of my mind. That's why I'm starting to show these charts. So we are downtrending on Microsoft price right now, and their earnings EPS and revenue is like basically all-time high. So that's why, for me, tech earnings upcoming is absolutely critical. Once we have the first major 1 or 2 quarters of bad EPS and revenue, price is probably going to crash. That's why I need to prepare for that scenario. Okay, here's a perfect example. NVDA, even without looking at the price, if I open their EPS chart, since 2020, way back here, the pandemic started like right here somewhere. Let's just say right there. It was around estimated under 4 cents, pandemic start. And then we had pandemic going up problems, and then we had inflation problems. And that's when the stock crashed in 2022 to 2023. Just talking to one of my fellow traders that it's really obvious on the EPS. It was like 1 quarter, because we had 1, 2, 3 quarters of basically bad earnings, or reduced, not bad, but reduced earnings. So it's negative. And then in October 2022, we had a very, very small, slight increase, like a 4% increase from July 2022 to October 2022. You probably can't see this. Let me like zoom in more. And this sounds really boring, but if somebody does their due diligence or research on something like as simple as EPS, and then you could see here in January 2023, it was at almost 6 cents. So 100% EPS gain from the previous quarter is huge. You can actually see the turnaround going from down to like sideways and then up. So then if you go to the price in that area, there is a massive technical setup. So going from here down to sideways to up trend, you can see we went down in the price to sideways consolidation. And once we started at good earnings, that's when NVIDIA started its 500 to 1,000. I think it was 1,000% run. And then what do I see at that time? If you remember our video, we had a massive upside down head and shoulders on NVIDIA. It's huge. And so that was just from bottom to top there, that itself was 75% volatility pull back. And then if you know your technical analysis, it's downtrending into a consolidation sideways. And then once we uptrend, I have to get in there as a stock investor, as a chart analyst. For charts, it's screaming at me right now, or not right now, it's screaming in this end of 2022 to beginning of 2023. We are about to trend change. No FOMO charts. You must buy NVIDIA in January 2023. Fast forward to now. Now everybody knows who NVIDIA is, right? Look how you can't even see the chart anymore. It went from $17 up to $187 right now, and this is after the stock split. So that was the exact spot, the exact buy spot from the 1,000% gain. Extremely important. So then now the logical question is, what about now? In the next 30, 40 days, are we going up or going down for NVIDIA? So that's what people always ask me. Or actually, people always say like, they're always talking about, oh, NVIDIA's up a lot, but then no one's ever talking about EPS or revenue or even price or volume. So that's why I must talk about it. It's the whole point of this video. So right now what I'm seeing is I'm seeing left shoulder, head, and potential right shoulder. This could be potential bearish. Now it's only going to be bearish if we lose the neckline support, which is 169 or even like 166 on the left side. So we lose that support or lose this neckline support, then we might get a crash of 25%. That is huge crash though. So I predict, or my forecast, my belief, or actually I should just say my belief is we're probably not going to crash on NVIDIA until there's some massive problem in the EPS revenue or AI data center sales, or like manufacturing problems, demand problems, like something major needs to go wrong for the price to crash that much. Because besides that, it could just be the stock price being too high, right? If we have prolonged consolidation sideways, this is like tariff crash. So that was very, very unique to that era of time. Now it's kind of a similar problem, but I don't think we're going to get like tariffs part two. I mean, I hope not, but we sort of had a little bit of that where China exports, et cetera, on graphics cards. So, and the price is going up right now. So perhaps demand might go down because of price. GPUs going from like a 5090 could go from 2,500 USD up to 5,000 USD. I'm not buying that. No way. What is this, 2021? Again, RAM prices are up like 300, 400%. And so that's having an effect on some of the demand underneath for consumers. So this is kind of how I analyze the charts and how I'm going to move forward. So we are closely watching EPS and revenue. If I just pull up the 50 EMA cross, that 200 EMA is 159. That line in the sand needs to hold, although it has crashed below, but that was tariffs. So if that ever happens again, we downtrend and then kind of go sideways and need to have an uptrend reversal. We're consolidating right now. It's not good on the price. Google. And you might say, oh, this is so boring. But you know what? Google was the #1 Magnificent 7 stock of last year. Even when I think about it, talking to my colleagues, it's so obvious, right? And let's just list some reasons besides this, just for me personally. It's like, let's list reasons why I should have bought or why I need to pay attention to Google more. It's Google. I mean, how many services do they have available to people? Gmail, Google Drive, YouTube, there's Google advertising, Google websites, Google search, there's Gemini, Google AI. I think there's like GChat. I think there's like the video conferencing in Gmail. You just open, if you have your account, you just open that suite and there's like 20 or maybe there's 10 Google products. And then if we come here to their EPS, ever since the beginning of 2023, same thing. We saw the EPS drop down. It went sideways and then surprise, positive EPS. When was that? March 2023. So then rewind, that's exactly where we golden crossed again, right? We were downtrending. Everyone thought this is the bear market, but then fundamentals changed, golden cross. And for me this year, if I see more golden crosses on certain big name stocks, like I'm just going to auto buy this time. I don't need to think so hard about it. I don't need to overanalyze for 1 hour. If I see a golden cross on a Magnificent 7 stock, and maybe I'll check the EPS revenue as well, and it's starting to increase for like 1 or 2 quarters, that's just auto buy, automatic buy for an investor. Now, if I'm a trader, the automatic buy was after a swing trader. The automatic buy for me, the last golden cross was July 2025. We still had wonderful gains, 65%, 60%. If I bought tariff lows, because I still remember that day, April 7th, burned into my mind. That's 120% volatility potential, 100% potential for Google. That was beautiful run. Now, the question is, what about today and the future? Because their earnings actually had a plus 24% EPS jump up in the fall of last year. And it's actually, again, it's the highest EPS and highest revenue of all time in the history of Google. That's why I am a little bit more cautious, because once we get the downtick, right, let's use multiple examples. Sometimes you get a downtick and then you get that pullback. This is probably here. You get a small pullback. Or if it consolidates like this, if the price goes up and then you have like marginal earnings, it only went up like 1%. And then if there's like a negative catalyst, in this case, there's tariffs, then you get that momentum shifting to the downside. So that could happen again. Not tariffs, but just using the same sequence. We crashed, we had a nice rally. And then if the innovation and the sales and the revenue and the profit starts to shrink a little bit, probably billionaire hedge funds and institutions will trim a little bit of their position, and then shorts will probably try to attack that. And then maybe retail will get like stopped out. If somebody FOMO'd in, unfortunately, if somebody bought a little bit too high, it happens to everybody, and the market goes against them, their stop losses could get triggered and crash. So the support I'm looking for at Google, 297 and 285. That's what I'm looking for. Additional pivot points as well could be below like 260. But this is how I'm going to start to analyze some of these stocks. I don't want to make this video too long, but you can see it's very simple. Just factor in the EPS revenue and what the guidance and what the news was. And if we're in an uptrend and it's pretty decent, it has a higher chance of continuation because it's Google AI. Right. All right, let's switch over to crypto. And notice that I'm not using 50 indicators. I only need to use like one. If I'm doing it like that, investment mindset is totally different. I don't need 10 indicators on the left side. Doesn't matter. As an investor, the earnings and the prospects and the future profit potential, the future possibilities of that company. And I'm using Google products every single day. Let's go to crypto, for example. So again, this is not financial advice. I'm usually talking about past strategies or events to try to help increase the probability chance of me making the correct trade. So actually, even if we look at Bitcoin, it's Asia Open in Monday right now, and we had a nice gap up. Right, it's like a 1% gap up. I like to see that. Right, I like to see that. So again, you can see we clearly marked, or I clearly marked, this is a support zone. I like this W bottom double potential. I said that like 25 days ago. I'm already in there. I'm in there. So let's go to total. Total market cap, remember, and I don't want to keep saying I told you so, but it's because if there's anybody new, I have to say it for that, is that I had this call out. I called this weeks ago that if we do not go down in the price, we can go up. Downtrend to consolidation, double bottom W. My target's way up here. We passed the 3 trillion, this blue line, beautiful. Let me see a continuation to 3.3 trillion. Beautiful. Let me see it continue to 3.5 trillion. Let it get extreme. Let there be FOMO in the market, and then I sell as a trader. If I'm an investor, I just hold there because you never know. What if we just bought the bottom of the 2026 rally, right? So that's why as an investor, you never know exactly where's the bottom or top. But for me, one mistake that I've needed to personally in my career to fix in my trading is hold longer, way like 50 times longer. I need to hold longer. For example, in total, I bought this upside down head and shoulders and I'm in there, right? This was back in like April 2025. So it gapped, it starts going up. And once it goes up to about 12%, the natural inclination for me as a trader is I want to lock in my profit. Let me put a stop loss. And yes, that is correct. But if I switch, or not switch, but if I think as an investor, that is not the end of the rally. That's not the end. It kept going. It kept going 50, 60%, right? So for me, I have to make sure that after these mega downtrends, and then I actually see the A+ setup reversal to just not exit right away. That's a personal thing I need to work on this year for both trading and investing. So for me, because I'm in here at such a good price for total overall, I need to not sell right away unless there's an emergency. I will only sell, like, I almost have to personally think about just move my stop to like break even or just above and not always have such a super tight stop loss for myself. Okay, total, we could see that bounce, total 2, nice bounce up. We broke above 50 EMA and see if we could target probably the 100 EMA somewhere in here. 1.3 trillion. And we could also see in total 3, we had a nice bullish divergence momentum. So we could see the price is going lower low. I have to go back to my indicators. Pull back and we could see, starting to see momentum. I love this setup. I love it. Where you get a higher high. This is bullish momentum. This is double bullish momentum. From experience, I knew. Okay, no FOMO charts. If you just wait, if I just wait for the second one, do not quit this market from experience. Do not quit charts in December 2025. Nothing's happening. Buy, probably, for me. Because this is, I shouldn't say that. If nothing's happening, watch the charts and make a plan. Manage risk. Weigh my probability chances. For me, when I have this double MACD and double squeeze indicator, and then it starts just baby uptrending, oh, I'm in there, auto buy. Auto buy, buy. And then hold it. So I'm in a holding phase right now. We could see, let's just do Bitcoin price for a while. No indicators. That a lot of the setup was downtrend sideways. We build that momentum and boom, little squeeze. So now we're probably going to test the profit taking level of like 93, 94,000. How high can this go? If we measure that triangle, we could do 10% from the breakout, which we could try to go to 98,000 Bitcoin. Ethereum, try to test 3,400. Now let's get into the new stuff. XRP, simple method that I like to use. Draw resistance trend line. Now that's my resistance. How did I know how to buy back into XRP? I like to do cascading trend lines sometimes. Once I have the trend line, let's use the most newest one, for example. Once I have such a tight trend line, resistance and support like this, and then as soon as it goes sideways, makes a higher low, double bottom, I bought right there perfectly. 180, something like 188, 187. I have a nice trade going on. And how do I know how to do that? It's not guessing, it's not magic, it's technical analysis on the charts. So first, identify trend. This is not the perfect chart to do that, but we were going from downtrend to a little bit of sideways. Then maybe I could pull up a Fibonacci to get some support levels, low to high. And then we got close enough to the 618 zone. It wasn't exact, but you can see from my analysis on these wicks down here, 221, this wick down here, 191. So somebody's auto buying down here. Even this potential wick, $1.80. In the past, there's a wick at 175. So there's some support down here. And then the double momentum play. And that got me in. So in terms of, let me wrap up this video. Resistance targets for XRP is 222 and 238. Binance coin, we're above the pivot point. I like that. Let me make this bigger for people to see. Binance coin, we're above 864. Resistance 913, 943, 990. I like it. Solana, I'm also in. You could see the clear trend change. Perfect textbook example. Downtrending. And then you see it tighten, right? It's tightening. We're not doing this. It's going sideways, higher low. Oh, I'm going to buy right in the middle of that. Nice trade. Above the pivot point. Resistance 140, 147, 160. There's probably going to be a pullback at some point. So but this pivot, which was retested for a day, is 129 support level. We need to never crash below 120. That could be a problem if that happens in 2026. Now, Zcash already had its rally. That's why it rallied already from December. There's nice volatility in there. It already went 60%, but it's after a monster move. So for me personally, I traded this last part. I didn't trade the continuation of Zcash because I was doing other things in the market. But One easy way to kind of get in here is from the general breakout spot to the top of Zcash. We hit the 618 zone perfectly. So 50% and 618, if you know your Fibonacci, are interesting support levels to try to get in there. And it's also writing support. So I could have played the trendline support, but I don't really like doing that because sometimes it crashes. So we can see Zcash is like stuck here between resistance of 550 and support of 457, just right in the middle right there. So not my ideal perfect entry. Zen had a nice bull momentum reversal, bullish momentum on Zen, and then you can see the massive squeeze that's happening. So Zen has potential to continue, but it's already up something like 30% off its lows. What I'm looking for Zen actually is what would change my mind. If this turns into an upside down head and shoulders, so if we pull back to about 830 range, I actually might buy Zen because if it goes up like that. So I'm watching the 840 zone. Dash had a nice pullback, higher low above the pivot point, next resistance $49. Tau resistance 286, support 241. And now I'm going rapid fire. You can see Tron as well. I guess I missed the entry on Tron. I probably should have bought it like a week ago. But we had the uptrend, the consolidation, downtrend to consolidation. So if we're crypto trading, it's almost like an automatic buy. I bought a whole bunch of other cryptos, but not Tron. Doge as well. You had massive. So a lot of times when I don't see a big setup like this on Doge or altcoins, you can see some momentum building. I love the TTM squeeze, professional version, or just TTM squeeze, where it was building for a really long time on the squeeze indicator. I can do it on MACD, but it's not as clear for me because maybe yellow color pops more. And sometimes these upper green ones on a squeeze actually is like a yellow color. Easier to see, but because I knew the correlation that's happening with Bitcoin, that we're starting to get bullish momentum and then the momentum's building, I auto-buyed some of this stuff. But for me, somebody might be saying, okay, great for you, no FOMO charts. What about my account? What about, this month? What about this year? I'm always a proponent of just buying as low as possible support zone. So even if we have this flash short squeeze, we actually could reject and crash back down. So that could be maybe the last attempt for somebody to get back in if we pull back to like 13 cents, then try one more time to get something like that. Because if we get a large head and shoulders, upside down head and shoulders, there could be another pullback before the rally. Because it has to be high, low, high, low, high, low. Higher high, higher low. Higher high, higher low, higher high. Right? So if we pull back, I might rebuy some more. Cardano as well. Now, this was risky. Remember, I told you guys that I'm a risky, aggressive swing trader. So when I see a setup, I take it. But from experience, I know when we have massive crashes or a massive topping signal, like a head and shoulders, multiple tops, or this type of setup, is to also have maximum patience. It's not about maximum aggression for trading. It's maximum patience and discipline. So I just did nothing here for October, November, December on Cardano, did nothing. And then when I saw that Bitcoin Ethereum's about to turn around, I see the double momentum. Okay, time to rebuy. Here we go. I bought Cardano. Simple as that. I'm in Cardano and I'm waiting. Now for me, people tell me, my friends or traders, they tell me like I buy at such a good spot. So then my personal issue is I need to hold for as long as possible. Hold it for as long as possible. No FOMO charts. Do not get shaken out of your position. Diamond hands when I buy at the bottom. Diamond hands, and I can sell at the top for a trade. Right? So I'm going to have to wait. I'm just going to wait 30, 60, 90 days for that strategy. Sometimes it goes for a whole year. So 3, 6 months, 9 months, 12 months, I'm just going to hold. We are in this death cross zone, so there's still risk. That's why I'm a risky swing trader. It's in a downtrend. Yes, I see that and I understand that. But I'm playing, this could potentially be the bottom. This could be a higher low. If we reject down, no problem. No problem. Just don't let it, I'm not going to hold it and let it crash down to nothing. That is something I don't want to happen, where I have positive trades and it turns into a crash. I'm also going to say I bought Link. I'm not going to tell every single position, although I'm revealing a lot of my positions right now. And this will be the last one. We hit the hour mark. This is a good example. Link. Remember, trend. Turn off all the indicators. Am I uptrending? Am I downtrending in the price? Am I consolidating, going sideways or range bound between top and bottom, going rectangle, square? We were downtrending. So even before that, summer, we uptrended to a top, hit a resistance zone of $28. We're downtrending. Then why did I re-enter and buy Link right now? One of my favorite daily chart, weekly chart patterns. Oh, you know what it is already. The W. And you have a W inside of the W. And then you had a mini upside. You had there's 5 patterns in here. Let me just explain it. There's a bigger W potential pattern. There's a smaller W, a baby W. I like to call it mini W. Then there was a mini upside down head and shoulders, or this can be interpreted as another W. Then the volume was decreasing. So selling volume decreasing, that's good. And then support is holding above $12, a previous level support as well. That's basically the low zone from the past, somewhere around $12 average. I could bring a volume profile that people want to know. That most trading price happens around $13, $14. So I was getting a little bit of this discount here, $12 in Link. And even looking at, let's say, 100 crypto charts, this one stood out to me because there's that double bottom. So I just said double bottom, Bitcoin, double bottom. Potential momentum's building in terms of this coin. Since 2023, it's in the 618 zone. Since 2000, or tariff low, we're in the 8.88 zone. I am seeing, you can see it on the squeeze that, right? Momentum's been building for 6 months. Momentum. MACD momentum building for 6 months. Prices falling for 6 months. And then when it stops, I must buy that. No fear. Or less fear. And how did I do it? Let's just do easy risk management. What I did was buy somewhere. I'll just pretend I'll buy it at 13 for this easy example. And then we're going to pull back where could my stop loss be? If the ATAR is 60 cents down here in the bottom right, average true range, one average true range estimated move for 1 day would be about negative 4.7%. Let's make that 5%. So then I doubled that to get a really safe stop loss. So let's say 10%. It's at the bottom of that closed W bottom, even though the wicks could stop me out if we had problem, if it pulls back hard. So that's like my mental stop loss right now, $12 right there. Now, in terms of upside potential, I like to see, this isn't even a perfect setup because it hasn't officially massively broken out on this side. That's why for me, I need massive patience because I was getting at such a good spot and I'm so much earlier than other people. So maybe nobody is going to notice crypto, Bitcoin, Ethereum, altcoins until like 1 month from now. But I'm just telling you guys that I'm already in this. And if it pulls back, it's okay. Not my ideal setup. If it pulls back, all right, fine. And I just don't want it to crash. Then I have a massive loss. So that's bad. So for me, I'm even managing my risk, for example. So if I'm risking a small position, 10%, then maybe I need to target at least 20% and then lock in, and then move my stop there to make sure I'm having a good habit of not letting the the red side get out of control. Can't have an uncapped red stop loss or losses. Have to cap it for crypto for trading. Just make sure it's not too tight so I don't get kicked out. So I have a 15% margin of safety right now. 10 to 15% margin of safety in crypto. And so I'm just waiting. All right, everybody. This is a really long video and I might not do it exactly like this every single time, but I'm starting to experiment with going into slightly deeper dives, and there might be somebody out there who's going to appreciate either the fundamental data, the stock chart patterns, or the trading education. And we'll do bar replay in the future. But I think I gave enough setups and education that somebody could really learn from this video. So thank you for watching. If you like this video and my channel, please consider subscribing. I appreciate it a lot. It shows me that people are supporting the channel and the videos. Click the like button if you liked or learned something. Hit the notification bell so you don't miss the next live stream. And if you have a chart request or a question, just please go ahead and write it in the comments. And if it's a good legitimate question or chart request, I will consider doing that in the next video. So thank you so much for watching. Happy New Year, and I'll see you next week.